Hey traders, Raghee here, and in this Simpler Futures recap video, I'm going to walk you through one of the things that has really been integral to keeping me in the game, and that is this mindset of always being on the offense. Even when the market's doing something that I don't necessarily want to see happen, as in the market going against me, I know it's still an opportunity to think about trade management, risk management. Maybe it's about making sure I've realized a profit target when I had the opportunity. Maybe it's being vigilant about my trailing stop. Maybe it's making sure I'm ready with that stop loss placement if and when it comes. So I'm always thinking about what I can do to just keep my progress moving forward and just carry on, right? So let me give you a few examples of this, because a lot of times I think what happens is traders psych themselves out. And the most powerful part of the game is to make sure that you want to be able to always stay positive in terms of your outlook on the market, because if you fixate on a loser, what you could be doing is distracting yourself from what could be a winner or a better market to trade. So it's really, again, very important to always stay on the offense. Euro-US is a perfect example. Ever since we exhausted from 121, I keep getting asked, Raghee, do you believe that there's still a strength story here? And I'll tell you, it's a different kind of strength story. We went from an overall uptrend to now more of a choppy market. But we will always do what? Respect the trend that was. We will always respect the trend that was, which means we came up in a very bullish way. We've transitioned. This is not a downtrend. This is really just a sideways market. And what I'll do is I'll stay opportunistic. As the market moves down lower, right now I'm excited, because that means I might be able to get another shot at that 117 level and take that to 1880. I'll take those 170 some pips off the table and then trail a stop to the remainder of my position. So another thing too is the profit target isn't the profit target. One of the things you'll notice within the members area of the site is I have a spreadsheet, and in that spreadsheet I'll have up to 3 profit targets, an optional and 2 profit targets, because I want you to scale out as the trade moves in your favor. Don't just get flat at the first profit target unless you only have 1 unit with which to manage the trade. But if you have multiple contracts, multiple lots, you want to be able to manage the trade, reducing your risk and paying yourself simultaneously as the trade goes in your favor, until finally you're in that enviable position of simply a trailing stop. Let's talk about the NQ here. This is a brand new trade that we put on where we took a 60.55 entry on the 480-minute time frame, because we have overall a really decent uptrend, even though it's transitioned. And I'll hear a lot of people tell me what a bad day this was. And maybe if you were long from up in here, which we seldom are, practically never, we're long from 60.55. Was this a great day? No. But what am I doing? I'm managing my winner. We had already taken 2 profit targets off the table. That 60.55 entry has seen a profit target at not just 60.87, but 61.18. So I want to make sure I'm paying myself, reducing my risk, and then remembering where my break-even stop is, which is actually right now at 60.45. So was this a bad day? It was a bad day for the remainder of my position, but I'm still very thankful we saw 61.18. That's a fantastic profit for us, right? I'm looking at over, a 65 pip winner. I'll take, or 65 point winner. I'll take that. And then what am I doing? Hey, if I get another shot at 60.55, or I get an intraday trend reversal, heck, we might get right back in again. Always stay on the offense. Another thing that I'm watching is the crude oil market. We had just taken some puts in crude, rode them down to 51, right? So a lot of traders said, okay, are we going to do it again? Well, again, staying on the offense for me here means I might have to acknowledge that OPEC has done an excellent job, really, at controlling the narrative, and I might want to start thinking about buying an oversold crude oil market. But might I look for another set of puts to capitalize on again? That was a really nice trade. Some of these positions were bought for $840, $860 per put and liquidated about 24 hours later for over 1,200 each. Not too shabby for less than, really for an overnight position or for a position that lasted a day or two. So again, always be on the offense. Here's 3 examples of positions that we've been in and a way you can view them. I'll see you in the next update.